Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name CareersCloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this UI. And there will be option for home, all courses, my courses and doubt section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format. And apart from English PDF, we also provide them in Hindi format. And this banking awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF. And also Exam Perspective PDF will also be uploaded. And next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Now, here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English, and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news, and this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend after reading the PDF, you can also go and attend the quiz. This is available in the Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI assistant mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI assistant mains. Similarly for SBI PO, RRB PO, clerk mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics. Today, we will be covering February 2nd week banking and finance awareness news. Moving to the first news. The first news is about the Monetary Policy Committee meetings. So if you see, this is the 6th MPC meeting for the financial year 25. But if you see, this is the first meeting of the new governor. So this is the 6th bi-monthly monetary policy meeting for the financial year 25. And new thing is that the first meeting chaired by the new governor, that is Sanjay Malhotra. So here they have revised the GDP for the financial year 26. The revised GDP projection is 6.7%, and this is the other participants of this MPC committee are Nagesh Kumar, Saugatta Bhattacharya, Professor Ram Singh, Rajiv Ranjan and M. Rajeshwar Rao. Remember the names, it is very important. Nagesh Kumar, Saugatta Bhattacharya, Ram Singh, Rajiv Ranjan and Rajeshwar Rao. Along with this, the RBI governor is one of the participants of this MPC meeting. So if you see, one of the unique thing that happened here is that they have reduced the repo rate from 6.5% to 6.25% almost after 5 years. So almost after 5 years, this repo rate reduction has taken place, and this has been done by everyone. So everyone has voted for the reduction in the repo rate. All the members of the MPC committee, they had voted unanimously for the reduction in the repo rate, and also along with the repo rate, the other rates linked to the repo rate, that is the margin standing facility and the SDF, both have been reduced. So Repo rate has come down from 6.5 to 6.25, MSF to 6.5 and SDF to 6%, and also the bank rate is also 6.5. So here they have projected that the GDP projection for the first quarter financial year 26 is expected to grow at 6.7%, and second quarter financial 26 it is expected to grow at 7%. The third and fourth quarter the GDP projection is 6.5%. So they have also projected the retail inflation to go down to 4.2% in financial year 26, and for financial year 25 they have maintained the previous forecast, that is 4.8%. Remember the retail inflation, it is expected to be 4.8% in financial year 25 and 4.2% in financial year 26. So if you see the retail inflation, it fell down to 5.22% in December 2024 due to decline in food prices, particularly vegetables. So retail inflation 4.8% in financial year 25, 4.2% in financial year 26. So few highlights of this meeting is that first is cybersecurity. In order to strengthen the cybersecurity in India, they have created two domains. So one is the bank.in and the other one is the fin.in. Bank.in domain, it will be exclusively assigned to the Indian banks, and fin.in, it is for the NBFC, that is non-banking financial entities. So the main reason to introduce is this because of the increasing cyber threats. So we know that a lot of cyber threats are happening almost every day. So to strengthen the cyber security, these two domains were introduced. So to counter the rising cyber threats, fraudulent activities in the digital transaction, these two domains were introduced. So this, if you see, the IDRBT, that is Institute for Development and Research in Banking Technology, located in Hyderabad, it will serve as the official register for these domains. So these two domains, the official register will be IDRBT, that is Institute for Development and Research in Banking Technology. It is located in Hyderabad. Next is RBI to implement additional factor authentication for the cross-border digital transaction. We know that this AFA is already present in the domestic transaction. Say suppose if you want to buy some product in Amazon, if you want to book a movie in say Book My Show. So you will provide the card details, right? Card number, the name, the CVV, the expiry date, all this will be provided. Apart from that, when you were about to end the transaction, you will also receive an OTP, one-time password to your phone, registered mobile number. You have to enter that, only then the transaction gets completed. So this OTP is the additional factor authentication. So already this is present in the domestic transaction, domestic digital transaction, it is already present. So to strengthen the cross-border digital transaction, RBI is planning to introduce this additional factor authentication. So to implement additional factor of authentication for the cross-border card not present transaction. So this digital transaction, just like My Show or Amazon, there the physical card is not presented, right? The card details you enter in the website and then the transaction is proceeded. So for those type of transaction in cross-border, they are trying to implement this additional factor of authentication. So unlike domestic transactions where additional factor is already mandatory, international online payments have so far lacked this additional security check. Next one is RBI allows non-bank brokers access to the NDS, that is Negotiated Dealing System order matching, forms panel on market timings. So forms a panel on the market timing also. This is a different one. So here if you see NDS-OM, this is a system where the secondary trading of government securities takes place. Just like in the stock market, the trading of shares or equities takes place between various members. Here, the secondary trading of the securities, government securities, takes place in this system. That is the main purpose of this system. Okay. Now, the non-bank brokers will also have access to this system. The non-bank brokers registered with SEBI will be able to now use this platform, Negotiated Dealing System order matching platform, to trade the government securities. So here they will trade in the security market on behalf of the clients. Okay. So apart from that, if you see, RBI has established a 9-member working group to conduct a review of trading and settlement timing for the financial markets. So this panel, it will be headed by Radha Shyam Ratho. Remember the name, the panel will be headed by Radha Shyam Ratho, and here the purpose of the panel is to review the trading and settlement timing for the financial market. Okay. The next is RBI approves bond forwards to strengthen long-term investment strategies. So here RBI has announced to allow trading in the bond forward. So what is this bond forward? Bond forward, it is a deal under which a financial institution can buy a specific government security for a pre-agreed price at a future date. So suppose the entity, say the insurance company is planning to buy the government security after 6 months. So now itself the price, say this is February month, right? So now itself the price of that security will be decided. Okay, so this will ensure that there will not be any risks that will be faced by the insurance company. So that is the main reason for this bond forward, a deal under which a financial institution can buy a specific government security for a pre-agreed price at a future rate. So the bond forwards will enable long-term investors such as insurance companies and pension funds to hedge interest rate risk over the different interest rate cycles. Now, if you're wondering what is interest rate risk, it is the risk that the value of bond could be affected by changing interest rates before maturity. So let me explain this with an example. So if you see the relationship between the interest rate and bond price, it is inversely proportional. Okay, say suppose a company has issued a bond, okay, and the bond is set to expire in 2 years, and it will provide a coupon amount or the interest every 6 months. Say the bond value is 1000 rupees. This is for an example. Tenure 2 years and the coupon rate is 10%. Okay, so now a person A buys the bond. So after 6 months, he receives 100 rupees because that is the interest amount, right? So the return that the people who invest in bond they get is the interest amount, and after that at the time of maturity they will receive the principal amount. This is how the bond works. Okay, so after 6 months the person receives 100 rupees as the interest amount. Then what happens is that then the interest rate is increased in the market. Okay, then the interest rate is increased in the market. So now this type of bond, say the bond name is X. Okay, the similar type of bond which has similar risk is now be issued at an interest rate of 15%. Okay, so previously before 6 months the similar risk type of bond was issued at 10%. Now after 6%, what happens is that the similar risk type, a new bond is being issued at 15%. Now if you see, people will like to buy this, right? People will prefer to buy this because this provides a higher interest rate. So what they will do is they will try to sell this bond. So this bond, this person A will try to sell this bond X in the market because he will buy another bond which gives a higher interest rate. So he needs money for that. For that reason, he will try to liquidate this bond by selling the bond in the market. Now if you see, this bond amount is 1000 rupees, but it offers only 10%. And this bond Y is also 1000 rupees, but it offers an interest rate of 15%. Now will they buy bond X or bond Y? Of course they will buy bond Y only because this offers a higher interest rate. If the bond A wants to sell this into the market, then he has to reduce this price. He has to reduce this price, say to 900 rupees. Then only people will come and buy this bond, because when they get a bond with a higher interest rate, then why should they pay the same amount to another bond which offers a lower interest rate? That will not happen. So in that case, person A has to sell this bond at a discount because he will send it at a lower price. This is called as discount. Okay, so that is why the bond price, if you see, now it has gone down. The interest rate has gone up and so the bond price has gone down. This is the relationship between the bond price and the interest rate. Okay, so in order to give protection to the buyers, to the insurance company or pension funds, they get the premium, right? Where will they invest their money? They generally invest their money in the government security. For them, this will be very, very useful. That is why this bond forward was created, so that in future the price of the bond will be fixed now itself. So future whatever bond the insurance company is going to buy, that price will be fixed now itself. So that is the reason for introducing the introduction of the bond forward in the market. I'll read that news once again. So if you see, the bond forward will enable long-term investors such as insurance companies, pension funds to hedge interest rate risk over different interest rate cycles. The interest rate risk is the risk that the value of bond could be affected by changing interest rates before the maturity. Next is RBI defers implementation of the liquidity coverage ratio and project financing norms. So liquidity coverage ratio, if you see those proposed norms, it has been deferred. So it will not be implemented before March 31st, 2026. So liquidity coverage ratio, we know that it is the high quality liquid assets that the bank should maintain net cash outflow for the next 30 days. So for the next 30 days, whatever is the net cash outflow, that much of amount, that much of assets, that is high quality liquidity assets, should be maintained by the banks. This is the formula for the liquidity coverage ratio. This is to ensure that the banks do not go bankrupt when people come and ask for their money. The bank should have the money to immediately, or the bank should have liquidity assets that can be converted into money immediately, and it should be provided to the people who come and ask. This is for the 30 days. Okay. So now in between, if you see, the formula was planning, this is the formula currently, and RBI was trying to improve the formula. That is because previously, how can people go and access the money? Only through banks. Okay. So Monday to Saturday, the banks were working and the people can go to bank to withdraw their money. That is how it was previously, like 2 or 3 decades ago. But now if you see, ATM is there. It is functioning 24/7. So people can go and take their cash whenever they want. So that is why if you see here, the withdrawal of money, the run factor is more. That is, people withdrawing more money at any time they want. It is more compared to the previous time. So the same formula cannot be used even now. It has to be improvised. That is why this is meant for, and this implementation, it has been postponed and it will not be done before March 31st, 2026. Next is RBI delays implementation of additional reserve requirement for digital deposits. So deposits, if you see, digital deposits nothing but it has been opened by the bank, by the mobile application or by the net banking without visiting the banks. So those kind of deposits, they require additional reserve requirement because they can be withdrawn anytime they want. They can do it even at the night, 10 o'clock or 11 o'clock. But deposits which are deposited in the bank, they come to the bank and they fill the form and then deposit their money in FD or something, that can be broken only when they visit the bank. But if they open a digital deposit, then they can break it anytime they want. For those type of deposits, additional reserve requirement is required. But as of now, RBI has delayed its implementation until 2026. We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also, recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this static banking awareness course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon and then you'll be redirected to this page. In this, you have to go and click the static banking awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course. The next news is SEBI allowed retail investors to join Algo trading from the August 1st, 2025. Now, if you see, what is this Algo trading? It is nothing but set of computer programs that will analyze the market and then execute the buy and sell order itself on by its own. So if you see, generally, who will initiate the buy or sell order? The customer. Say suppose the customer has a Zerodha account. Okay, so this is a stockbroker. So customer will put the price at which it should buy and the quantity of shares that he or she wants to buy, and then click the buy button, and then it will check the market, and then it will get executed if the price matches. Similarly, the sell also will be done similar to this. So everything, the data and the quantity, everything, and the buy button or the sell button, everything is done by the customer. Okay, but here in case of algo trading, the computer program that is there in this algo trading will execute the buy and sell option. So here the customer interface is not involved, but there are certain conditions that the customer should feed in before itself. There are certain preconditions like don't buy below this price or get me a 5% profit. So certain conditions are there that will be provided by the customer, and then the algo trading or the computer program will check the price and also check if before executing the trade, it will check if the preconditions are met or not. If the conditions are met, the trade is executed. This is the algo trading. If you see, this algo trading is already available to the institutional investors. So the big investors who invest in huge amount, so these institutional investors, it is already available. Now SEBI thought that it should be available to the retail investors also. That is why it is planning to introduce this algo trading from August 1st, 2025. So for that, a proper framework is required, right? So the Brokers Industry Standards Forum has been asked with formulating detailed implementation standards by April 1st, 2025. So a standard should be there. That standard should be followed when this algorithm trading is introduced in the August 1st, 2025. So if you see the definition, the algorithm trading is a method of using computer programs to automatically buy and sell stocks. It uses mathematical algorithms to analyze the market data and execute trades based on the predefined rules. So this rules is set by the customer. Okay. Next, if you see, now what all has to be done. So first, if you see the broker authorization. So the broker has to obtain approval from the stock exchange for each algorithm offered to the retail investors. So here the broker like the Zerodha Upstocks, they will only offer this algo trading, this algorithm to the customers. So how many ever algorithms that they are planning to provide to the customers, all these algorithms has to be approved by the stock exchange. Okay, this is the first one. Next is unique identifier for orders. So each algorithm order should have a unique identifier so that it is very easy to track it, especially in the case of audit. In case of audit and all, it should be easily be trackable. That is why all algo traders, all algo orders must be tagged with a unique identifier provided by the exchange. Next one, if you see retail investors. So here you saw that the brokers, that is the stock brokers, they create the algorithms and that has to be approved by the stock exchange. But few retail investors who are tech savvy, that is they know the technology a lot, they can also create their own algorithms. Remember here we spoke about the brokers creating the algorithms. Here retail investors can also create their own algorithms, but that can be only used for self-purpose and for their family. Cannot be used by others, only for self and their close family members. And also if you see, this also has to be approved by the stock exchange if it exceeds certain threshold. So if their trading activity exceeds a specific order per second threshold, then it requires approval from or registration with the stock exchange. So tech savvy who develop their own algorithms must register them with the exchanges through their brokers if their trading activity exceeds a specified order per second threshold. Okay, remember this. So it will be available for the retail investors from August 1st, 2025, and the standard should be framed by April 1st, 2025. So the standing operating procedure, apart from the above things, even the standing operating procedure should also be mentioned, that is required for testing, monitoring and simulating this algorithm trading. For that, the stock exchanges are required to implement this standard operating procedure. And also one more thing is the kill mechanism. Now, the kill switch mechanism is to disable specific algos in case of any irregularities that have been found. So, if any algorithm that has been trading and if any irregularity is found, then it should be disabled immediately so that it does not cause any loss to the investors. So, for that, a kill switch mechanism should be there to immediately disable the algorithm which is not working properly. Okay, so this should be mentioned in the standard operating procedure. Next is about a loan that has been procured by the Kerala government from the World Bank. So, the World Bank has provided a loan amount of 2,424 crores. Remember the amounts, 2424. It is easy to remember. The World Bank has provided this loan to the Kerala government to strengthen the healthcare system. The program, if you see, Kerala Health System Improvement Program. So, to improve the entire healthcare system of the Kerala, this amount was provided by the World Bank. The amount is 2424 crores. And the Chief Minister of Kerala is Pinarayi Vijayan. Governor is Rajendra Vishwanath. The next is about a partnership. So, the PNB MetLife had partnered with the Policy Bazaar to launch a plan called Smart Invest Pension Plan. So, this Smart Invest Pension Plan is for people who are aged between 40 to 50 years. And here, if you see, there are two types of funds under the Smart Invest Pension Fund. A pension plan, that is pension mid-cap fund and pension bond fund. So, if you see, they also have an option of reducing their premium. Suppose after 5 years they do not have much money to pay the premium, then they don't have to stop the plan. They can reduce the premium that they have to pay. That option is given to them, and also partial withdrawal option. So, in case if they face any financial conditions, financial issues, that time they, after 5 years, they can either reduce the premium or make any partial withdrawals. That option is also available in the Smart Invest Pension Plan. Remember, it is PNB, PP. So, PNB, MetLife and Policy Bazaar. Just remember, maybe you can remember like PPP. Yeah, you can remember this PPP. PNB, Policy Bazaar, Pension Plan. The next news is about a Memorandum of Understanding signed. So, this MOU is signed between Tata Power Renewable Energy Limited and Vadodara based Bank of Baroda. Remember the two parties involved, Tata Power Renewable Energy Limited and Bank of Baroda. So, this has been signed in order to provide loans for the residential rooftop solar installation. So, remember, for the rooftop solar installation, that too for the residential purpose, this MOU has been signed. So, if under this loans, if you see, loan up to 6 lakhs will be provided to the residents. The interest rate at which the loan will be provided is 7%, and homeowners, they can install of up to 3 kilowatt, and if they are installing up to 3 kilowatt, the loan that they can access is up to 2 lakhs. Margin of 10% is required and 10 years is the repayment period. Okay, suppose to install 3 kilowatt solar panel, 2 lakhs loan has 2 lakhs is required. Okay, 2 lakhs amount is required to install 3 kilowatt. In that case, maximum 90% can be taken as loan, that is 1.8 lakh. Remaining 10%, that is at least 10% should be the margin, right? So, 20,000 should be contributed by the customer. And similarly, if they want to install 3 kilowatt to 10 kilowatt, then the loan amount is maximum up to 6 lakhs and 20% margin is required. In the previous case, the amount was less and 10% margin. Here, if you see up to 6 lakhs and the margin here is 20%. Okay. The next news is about an insurance plan. So, this has been launched by the Bajaj Allianz General Insurance Company. The insurance product name is Horizon Care. From here itself, you can guess is that her. So, it is exclusively for the women. Okay. So, this first comprehensive health insurance plan for the women. That is why Horizon Care. Various features of this, if you see, this is designed exclusively for women. This plan includes women aged between 18 to 80 and children from 90 days to 35 years. The sum insured here ranges from 3 lakhs to 2 crores, and it is also a first of kind insurance that covers infertility treatment, assisted reproductive technology, adoption expenses, congenital disability cover, and it also provides coverage to the surrogate mothers as well as to the live-in partners. So remember, these are the various features of this product. Main thing that you have to remember here is that Bajaj Allianz General Insurance Company launched this Horizon Care product. The next news is RBI has approved the merger of the urban cooperative banks. So the Goa-based Citizen Cooperative Bank and the Thane-based TJSB Sahakari Bank Limited has merged, and also Maharashtra-based Pune Commercial Cooperative Bank and also Pune-based Pimpri Chinchava Sahakari Bank have also been merged. So these are the cooperative banks, urban cooperative banks that have been merged. Remember the name Citizen Cooperative Bank, that is CCB, and TJSB Sahakari Bank Limited. These two have been merged, and Satara-based Pune Commercial Cooperative Bank and Pune-based Pimpri Chinchinwa Sahakari Bank have been merged. The next is SBI has reported 84% rise in the net profit for the third quarter of the financial year 25. So here net profit is it is calculated after minusing all the expenses and also the tax that has to be paid. Okay, so here if you see, it is 84% rise. It is very, very huge. So 84% rise, that is 16,891 crore in the third quarter, and also the net interest margin stood at 3.15%. Net interest margin, if you see, it is the net interest income. Net interest income is nothing but the difference between the interest earned and interest provided. So here interest earned, if you see, it is coming from the loan department, and here interest provided is to the interest that has to be provided to the depositors. So the difference between them is the net interest income, and here average interest earning asset. So for bank, asset is nothing but loans. Loans are assets to the bank. This is the formula for net interest margin. The net interest margin stood at 3.15%, and the total advance as of third quarter financial year 25 is 40 lakh crore. The gross NPA is 2.07%, and the capital adequacy ratio is 13.03%. The capital adequacy ratio, we know that as per RBI norms, 9% plus the capital conservation buffer of 2.5%. Totally 11.5% has to be maintained, and SBI is maintaining totally of 13%, which is well above the limit. The next news is about an appointment. So the New York-based Citibank has appointed Ashok Kullar, that is, he is the current CEO of the Mumbai-based Citibank, as the global co-head, of global asset managers based in London. Remember, here Ashok Kullar, he is the current CEO of Mumbai-based Citibank, has been appointed as the global co-head of global asset managers based in London. And now, since he has moved to this position, his position will be occupied by K. Balasubramaniam. K. Balasubramaniam will succeed Ashok Kullar. The next news is about asset management company. So asset management companies are those companies which manage the mutual funds. So many people invest in the mutual fund, right? That has to be managed by a company, and that is called as the asset management company. So here, if you see the Angel One Asset Management Company, it has launched two funds. One is the Angel One Nifty Total Market ETF, that is exchange traded fund. Second one is the Angel One Nifty Total Market Index Fund. So these will track the investments of the Nifty Total Fund. So there is a Nifty Total Index, and that index, whatever ratio it has invested in the stocks or the shares, the same ratio will be invested by this ETF and also the Angel One Nifty Total Market Index Fund. So the main thing is that ETF, it can be traded just like shares. So the prices of the ETF, it keeps fluctuating every second, just like the prices of the shares keeps fluctuating every second. So here if you see, both formats aim to track 750 stocks. So these funds, it will track 750 stocks, that is from the Nifty 500 and the Nifty Micro Cap 250. So remember, 750 stocks from the Nifty 500 and from the Nifty Micro Cap 250. Minimum investment is rupees 1000, and it is an open-ended fund. Open-ended funds means that it can be invested anytime the customer wants. Close-ended fund means that it has a timeline. So it will be open only from maybe Feb 1st to Feb 20. So there is a timeline within which the customer has to come and invest his or her money. But in case of open-ended fund, the customer can invest his or her money whenever he or she wants. The executive director and the CEO of Angel One AMC is Hemant Bhatia. The next news is about a penalty imposed by the Reserve Bank of India. So, rupees 27,30,000 has been imposed by the RBI on the Federal Bank because there was issues found during the inspection regarding the savings account. So, if you see, the issue was that the bank had opened certain savings deposit account in the name of entities that were not eligible to hold such accounts. So, if you see the institutions or if you see any business and all, they cannot hold savings account. They have to hold only current account. So, such discrepancies was found by the Reserve Bank of India during its inspection, and that is why this 27 lakh fine was imposed by the RBI on the Federal Bank. And also Karur Vysya Bank also, it was penalized for 8.3 lakh for not complying with RBI on the loan terms. There was some discrepancy found in the loan system, and that is why 8 lakh was penalized on the Karur Vysya Bank. Next is about a Mitra platform that is being launched by SEBI. So, SEBI has launched this Mitra platform to help investors trace inactive mutual funds. Mitra full form is Mutual Fund Investment Tracing and Retrieval Assistant. Remember, Mutual Fund Investment Tracing and Retrieval Assessment. People who had invested in mutual fund but they had forgotten for some reason and has been inactive for so many years, those people can come and track their mutual funds and claim it now. Just like, you know, say the bank accounts also, when people do not use it for 10 years, it becomes inactive. So, in that case, for 10 years, it goes to the DEF. Okay. So, when it is inactive for 10 years, the bank account gets transferred to the DEF, and when the customer comes to claim the bank account after 10 years, he can submit the various forms and claim the deposits from the DEF account. Okay. So, this platform helps investors in tracking, reclaiming inactive or unclaimed mutual fund folios. So, as per SEBI, an inactive mutual fund folio is defined as where no investor initiated transactions have occurred in the last 10 years, but unit balance still exists. So, when there is no transaction for the last 10 years, but the unit balance still exists, then that comes under this category, and you can track this or you can reclaim this under this platform. So, this platform, it will be jointly hosted by two qualified registrar and transfer agents. So, they are Chennai based Computer Age Management Services CAMS and Hyderabad based KFin Technologies. Remember, it is CAMS and KFin Technology which will host this platform, and Mitra platform will also comply with the cyber resilience framework of the SEBI. The next news is about an agreement. So, SEBI has signed an agreement with the France-based French development agencies, which is worth 100 million. So, this amount will be used to fund the MSMEs who are interested in investing in energy efficient technologies as well as renewable energy solutions and climate friendly business practices. So, finance will be provided for MSMEs investing in these areas. Remember, the amount involved, it is 100 million, and agreement is signed between SEBI and the Paris-based French Development Agency. So, SEBI Chairman and Managing Director is Manoj Mittal. It is headquartered in Lucknow, and this French Development Agency CEO is Remu Rioux and headquartered in Paris. Next is Small Finance Bank has received approval from the RBI to offer credit lines on the UPI. So, people who are using UPI, you will be able to see that many banks, they offer now credit lines. So, in the UPI app, say suppose GPay, you will be able to see message like you are now eligible for 8 lakh rupees loan or 5 lakh rupees loan. So, these kind of messages appear on your Google Pay, right? It is nothing but a credit line that has been offered, that has been allowed by the RBI. So, if you see, it was allowed in September 2023. It was expanded. The RBI expanded the scope of UPI by enabling pre-sanctioned credit line to be linked to the UPI. So, if your bank account is linked to the UPI, then you will have this option. You will have these messages like you are eligible for now credit of 5 lakh or 2 lakh. So, initially this was limited to the commercial banks, excluding the payment bank, small finance bank and RRB, and now it has been expanded to the small finance bank. So, including the commercial bank and the small finance bank that will now have access to the credit lines on the UPI. So, currently if you see 11 small finance banks are operating in India. Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer or regarding any payment issues. You can contact on directly on this number. Thank you.